This presentation is the second part of our discussion about the regulatory context of accounting and financial reporting. It introduces the conceptual framework and the term general purpose financial report, which is the structure and content of reports that the majority of reporting businesses will follow. Okay, now we have what's known as a conceptual framework, and that sets out concepts and presentation and requirements for financial statements, bearing in mind, as we already know, that the financial statements go to external users. So external users have to be confident about the information that they're receiving, and an informed external user will be familiar with the format and the presentation of financial statements. That's where we're going to take all of you students very shortly. We're going to learn about the preparation and the presentation of financial statements so that you can read them. Now, the conceptual framework has got a number of purposes. Here they've mentioned two, which are in relation to developing and maintaining the standard of accounting presentation, possibly for developing future standards if and when that becomes necessary, and also as a guide to resolving issues if those aren't clearly addressed in the actual standard itself. You see in the Australian conceptual framework that whilst we adopted back in 2005 the international framework, we did retain two of our own statements of accounting concepts. These are known colloquially as the SACs, SAC 1 and SAC 2. SAC 1 is the definition of a reporting entity. So in Australia, a reporting entity is defined for our own purposes. Reporting entities, a local concept, and defined the way we want it to be. And SAC 2 talks about the objective of general purpose financial reporting. That's got an acronym, by the way, GPFR. And in a moment we'll talk about general purpose financial reporting. But suffice to understand that GPFR is about the external financial reports. They are general purpose and not specific purpose for specific users. They're general purpose for the use of the general external public. So here we are about a reporting entity, the GPFR, General Purpose Financial Report. Say that 6 times in a hurry, the GPFR. Why is it important? Because external users depend on these reports, these GPFRs, to make their decisions about whether they will or won't invest, or whether they will or won't do business with this company, or perhaps potential employees about whether they want to be part of this company as an employee, or whether they feel that they want to take their employment somewhere else. So external users have to make decisions about these entities. They do them frequently on the basis of general purpose financial reports. And so these reports are very important, and the structure and the standard within which they report is of crucial interest to us. Common users, resource providers, investors, potential investors, employees, lenders, financiers, suppliers, the list goes on and on. Recipients of goods and services, customers, yes, customers have rights in this discussion too. And so all of us should have access to general purpose financial reports, and I'll encourage you to make use of them. We'll show you how. Why do these people have access to them? What do they do with it? Well, for oversight or review, we see organisations such as the government, analysts, employee-related organisations who might be trade unions or other industrial relations groups and consumer groups. They're all interested in the financial performance and status of these organisations. And of course, just the general public. And right at the end of that list, there are you and me, academics and students. We use them too in order to assess the role and the importance and the reliability and the sustainability of these entities. Let's quickly touch on some qualitative characteristics of financial information. We identify 4 principal qualitative characteristics, and these will seem pretty obvious to you, I hope. The first is that the information which is provided must be relevant. Well, that makes sense, doesn't it? Why would we want to read a financial report crammed full of irrelevant stuff? We do, of course, require that the information that we're reading is reliable. We can rely on it. We need to be able to understand it, and this, of course, is where we spend quite a bit of time making sure that you do understand how to read financial statements. It is the obligation of the user, by the way, to make sure that they are reasonably informed and can understand a properly prepared and presented set of financial statements. And comparability. It's important for us to be able to compare the data that we look at this year with the data that we looked at last year and the previous year and the previous year, so that we can get a sense of the progress and the changes that are going on in this business without it being complicated by changes in the basic reporting structure and meaning. Now, although it's not a qualitative characteristic, we also need to consider getting the reports out to the users in a timely fashion and the cost of the information that we collate compared with the benefit that we convey. So timeliness, let's look at that. Being timely means that the annual reports will be delivered within a couple of months of the end of the business year. There's no point in delivering the 2013 reports halfway through 2015. For most businesses, the reports have to be delivered within 3 months, and some will be allowed to do it within 4 months. Cost versus benefits is an important one too. A business could report at great length and in great detail and provide a huge amount of information, but they would have to ask yourself, and you would have to ask yourself, what's the extra benefit of having a great deal of detail? And it just might be that getting all of that detail means that you don't get the reports in time, and it also might mean that understanding them could be very difficult. So that's a trade-off there, the cost versus the benefit of what it is that we prepare and present.